All right. It's April 11th, 2025. Big Money Mike coming at you. And let me tell you, the markets have been swinging wilder than Elon Musk's Twitter feed during a tariff tantrum. Yesterday was a roller coaster ride as Trump's escalating tariffs sent shockwaves through global markets. The S&P 500 dropped 3.5%, the Nasdaq slid 4.3%, and the Dow shed 2.5%. If you thought Wednesday's rally was a sign of relief, Thursday reminded us that this tariff saga is far from over. Let's start with Trump's latest move, a cumulative 145% tariff on Chinese imports. Jim Cramer didn't mince words when he called it more of an embargo than a tariff. Cramer pointed out that America is addicted to cheap Chinese goods, everything from iPhones to furniture, and these tariffs are forcing companies like Apple and Dell into impossible decisions. Either raise prices and risk losing customers, or absorb the costs and watch margins crumble. The result? Inflation is about to hit harder than ever, and unemployment could spike as businesses scramble to adjust. While Cramer believes America can survive without China in the long run, he warns that the short-term pain will be brutal and disruptive. Now let's talk about Tesla, which has been riding its own wave of volatility. After Wednesday's historic rally, its biggest since 2013, Tesla shares tumbled 7.3% yesterday, bringing its year-to-date decline to a staggering 38%. The reason? China retaliated with an 84% tariff on U.S. goods, effectively throwing Tesla's Shanghai Gigafactory into chaos. Add in protests across Europe, declining deliveries, and Elon Musk's polarizing political antics, like endorsing Germany's far-right AfD party, and it's no wonder analysts are slashing price targets left and right. UBS now has Tesla at $190 with a sell rating, citing margin concerns and demand issues in an increasingly competitive EV market. Tesla may still have its loyal fan base, but right now it looks more like a cautionary tale than a comeback story. While tech struggles under the weight of tariffs, all eyes are on the banking sector as earnings season kicks off today with Wells Fargo, JP Morgan Chase, and Goldman Sachs leading the charge. Bank earnings are always important, but this time they're crucial for understanding where the economy is headed amidst all this uncertainty. Wells Fargo CEO Charlie Scharf is expected to address how tariffs might impact loan growth and consumer spending, key drivers for their net interest income, NII. Meanwhile, Goldman Sachs will likely focus on its investment banking pipeline as IPOs like Klarna and StubHub face delays due to market turmoil. Jim Cramer is bullish on Wells Fargo delivering strong numbers thanks to its domestic focus and efficiency initiatives, but Goldman could surprise if deal-making activity picks up later this year. One surprising trend amidst all this chaos is mortgage rates staying stubbornly high despite Trump's tariff pause earlier this week. The yield on 10-year Treasury bonds jumped to 4.4%, dragging mortgage rates higher with it. Bond traders are pricing in long-term inflation risks from tariffs combined with a Federal Reserve that seems hesitant to cut rates anytime soon. For first-time homebuyers already struggling with tight inventory and soaring prices, this is just another hurdle in an increasingly challenging housing market. Now for my hot stock pick, Wells Fargo, WFC. With minimal international exposure and strong domestic revenue streams, Wells Fargo is well-positioned to weather this tariff storm better than most financial institutions. Its cost-cutting measures are paying off, expenses are down, and NII remains solid despite macroeconomic headwinds. Trading at a P/E ratio of just 10x, far below industry peers, Wells Fargo looks like a bargain in today's volatile market. For those of you who love options plays, I'm recommending a Wells Fargo July 2025 $65 call. It's riskier than betting on Elon Musk staying quiet for an entire day, but if Wells delivers strong earnings today and provides optimistic guidance for the rest of the year, this stock could see significant upside. Looking ahead to Monday, April 14th, I'm predicting cautious optimism across major indexes as investors digest bank earnings results over the weekend. The S&P 500 could stabilize if Wells Fargo reassures investors about loan growth resilience amidst tariff uncertainty. The Dow might see strength from industrials like Caterpillar if infrastructure bets gain traction post-earnings calls. As for the Nasdaq, it may remain under pressure unless Apple or Tesla provide clarity on their supply chain strategies moving forward. That's all for today, my beautiful bulls and bears. Remember, in this market jungle, only the informed survive, and only the bold thrive. Stay savvy, stay hungry, and may your portfolio be as resilient as Wells Fargo's balance sheet. Big Money Mike signing off. Catch you next time.